Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another stock market update. Uh, last week, as we ended the our last trading day of the year was Friday, and Friday, as went into the close, we did get a little bit of a sell-off, a small sell-off. Um, but these days, with this V-shaped recovery, we don't get too many red days. So we did actually Thursday, looking at the S&P 500, the SPY, we could see got something looks almost like a little doji right there. We could see we had a little chop the last week, and that's just because we had low volume. Now, the volume kind of pumped in a little bit on Friday as the market closed. The S&P 500 futures were down, let's say roughly 0.5%, and then the Nasdaq futures was down about 0.5%. The Russell futures led the way down, and they were down one 1.63%, so 1.5% basically. And we saw a little sell-off going into the close. So, what I wanted to talk about this week for this show is being is that we've had the market just drifting up. At some point, I think we'll get a small pullback. I do think that after that pullback, the market will continue to go higher. I'm going to talk about some shorts that I have looked at, and something that we could possibly put a short on in, and maybe a short trade. I'm still in bullish overall, but to catch maybe this quick move that we might get, will coming up, you got to be in the trade before it comes, right? So let's take a look at these shorts that I got. First one that I have that I've been looking at is Lululemon. Now, let me first off say I am not bearish on the company as a whole, but when you look at a stock that has been doing what it's doing, right? If we look at, let's just put a year to date. So we're talking about from the beginning of the year, and we're currently, this is December 30th, so we haven't quite went to the new. By the time the next week comes around, we'll be in the new year. So we can look at the year to date. Look at what the stock is right now. Closed the market on Friday at 511.29, and you can see where it closed its first day on the third of this year, 323. So up, 100 and what's that? $78 or 100 and what, $88, something like that. $188 on the year. And you can see, excuse me, Friday when the market closed, we got a little wick and almost like an inverted hammer. So same way when we get a hammer like right here, like Thor's hammer pushing or beating the market up, then we get an inverted hammer here. So for me, it's overbought on the RSI and the stochastic. So this is for me, would be like, a possible short. So how would I short it? If I come into this looking at it, um, well, Monday is New Year, so it would be Tuesday morning. What would we want to do possibly to take advantage of a short play? It would be something like a put spread. If I were gonna do it, I would come in here maybe 34 days. And because Lulu is a $500 stock, you're gonna have $5 wide strikes. So you basically buy one in the money, sell one out of the money, and that's gonna cost you about 237. And you have a 71% chance of making 50% of that. So that's basically, and when you're doing these put spreads, which is how I was shorted. You don't need the market to come to retrace $80 or $100. Basically, you could probably get a little $20 retracement, maybe 30, get it somewhere back into here, pulls back into this support, and then you could take your money, take your close out your spread and move on to the next trade. So these are just trades, not necessarily because the market is stretched. So you're just playing a pullback. with something like that. Next one on the docket is Royal Caribbean, ticker symbol RCL. Look at this, straight up. So you figure from October, if we're looking at this low right here, all the way up to here, that's like you got a low of about 80, $79. What's that about? We'll call it 79 bucks all the way up to 129. So you got a nice $50 rally in a what, 2 or 3 months. So you figure at some point we're gonna get a pullback, right? Don't have to, but just pot odds, right? So you're looking at it for the whole year from down here all the way up to there. So we may get, even if it's something like this, you don't even need that much to make a little money on this same type of trade. I will come here to the trade tab. More than likely, I will stay out of the earnings and maybe come right around here at 34 days. Maybe come by the 130, sell the 128, or you can buy the 131 and sell the 129. It's a $2 wide spread. You don't want to pay any more than a buck, maybe a buck oh five at the most. But I try to pay at least half of the box. So the box is 128 to 130. That's $2. And you can see right now it's showing that the price will be, of course, this is the after hours, about 90 bucks. When the market opens up, it'll probably be right around 90, 95. And so that would be the trade that I would be looking for Royal Caribbean. Let's look at the next stock on my list. JP Morgan. Now with JP Morgan, same this this chart looks similar to the Royal Caribbean chart. Look at it. I mean, just straight up. So for me, I would just be playing like, hey, I'm just looking at it to see if we can get a pullback. You don't need a big pullback to make money. Maybe about 10 bucks or so, maybe not even 10 bucks. You probably could make it at 170, maybe about 7 or 8 bucks. You could be out of the trade. So same ordeal. I'm probably going to stay within 34 days. Ideally for these type of spreads, I want to be right around 30. And so the options that we have is 27 and 34. So I will go 34, give you a little bit more time. You got $2.50 wide strikes for this particular expiration. So I would, buy that 172 and a half, sell the 375. Right now it's showing a debit of, and you're paying for these. So you buying to open, you would sell them to close. Showing you right now the cost 123. That's about half of what the box is. The box, once again, is right here. So that's $2.50, and you'd be paying 123. Max profit would be 127. That is the perfect type of the amount. You don't want to pay no more than, I would say, half of the box with maybe $5 added on. So maybe 130 would be the max I would pay. So let's go. Let's clear this out. Let's go to the next one I have on the docket, and that is CrowdStrike. Now, I do think CrowdStrike is a good company. However, now with this one, we already have a high, a low, and almost a lower low. This one I might pass on, and the only reason why I'm saying I might pass on because it looks like it already started. You want to try to catch them while they up, but this one as well. Um, if you came in here for 34 days, you got a $5 wide box. Come one in the money, buy the 260, sell the 255. Right now it's showing 260, so not quite 50%. That might be the most I'd pay for this one. Being as that it's a $5 wide, I probably wouldn't pay any more than 260. Ideally, you want to get filled for 250. You want to be right at the midpoint, getting filled. And that's how I would short now because I repeat, I'm not bearish at all. I think we'll get a little pullback, a nice little down move, and then the bull market will continue. because when you look at these stocks on monthlies and weeklies, they're in a nice bull trend on the longer time frames. And when you look at the S&P 500 on a longer time frame, so let's look at the monthly. Look at the monthly on the SPX, and we can see that we're right there at all-time highs. And so I do think it's going to break through those all-time highs. The next target that I have up for the SP 500 is right around 4,900. I do believe we'll get there before we get that before we get a down move. You're just going to be hard to kind of time it, right? When we look at the expected move for the week, I always like to look at the expected move of the SPX, which is just the option market for the S&P 500, so I can get a kind of a sense on what we think the market's going to do for the week. And we only have an expected move in the option market of about $47.66. That's not a lot. It was the same, similar, the prior week. It was like 40, 48, 40 something, almost $50. And you can see for the week we just kind of stayed in a range. It's quite possible that we may do the same thing. People coming back to work, a little later with New Year's being on a Monday. So they may, people may come in on Tuesday, maybe even Wednesday. So we got a shortened trading week. So I don't expect a whole lot of fireworks. But what I went over with these put spreads, these are quick ways on how to get short without. So you can still, let's say you own stock, you can still have your long stock plays and then maybe put these shorts on just to catch a little down move if the market does give us a sell off. Because we got to, at some point we'll get a pullback. Markets just aren't going to keep going straight up. So if guys, you got anything out of this, hit that like button, hit the subscribe button. And the platform that I am using, this is TastyTrade. I have a link in the description notes if you want to click on the link and open up an account with them. And yes, I do get something from it. If you open up an account, I think you have to put in a few $1,000s to get margin. So, but I think this is the best trading platform out there. So with that, guys, with that being said, I'm gonna be out. Peace.